Hello, everyone, and just some thoughts on the day. And I want to thank my friend up there on the Gold Coast, Gemma, who pointed out to me yesterday in some feedback that I was speaking a little too quickly. But I am trying to keep you entertained. I'm aware everyone is very, very busy, and I want to give you some information. With regards to the Biden nominee, I think he will maintain his position because the Democrats have two choices. They lose not reasonably badly with Biden, or they lose catastrophically with Kamala Harris. So that's their choice at this stage. And you know my solution. I always say Kennedy. Now, I've got an idea for you. Louis Vuitton, Moe, LVMH, the share is already falling. It's been falling for a while. And I always like when there's news stories from the head of a company telling his story on how successful and why he's been so successful, which is on some major media outlets today, Mr. Arnault. But his share price has started to fall. I actually, in the middle of the night last night, sold LVMH, and I'm going to send that out to clients today. If you'd like to get the client services, by the way, I haven't said this on social media before, but I'm currently running a special. I just put it up on my website yesterday. Get all of my work for $89 for a whole quarter of a year, 3 months, $89. And if you sign up for that, you can stick at the $89 a month for the rest of your life, for as long as you want to hear what I have to say in terms of actual specific market actions and some other things that may not pop up here. So please have a look, cliffordbennett.com.au. $89 for a quarter of a year of everything I can think of, and some of it will be wrong. I don't get everything right, but I'm really honest about having best effort for you. So, and I'm often very different to what you might be seeing in the financial media news headlines, which tend to lag reality quite significantly. I try to look ahead of reality over the horizon. I'm a humanoid, organic intelligence. Anyway, have a look at that offer. I think LVMH can keep falling for quite a long time because there's also some stories coming out. We all knew this might be happening in the background, that they make their bags rather more cheaply than they sell them for. I think it was, I won't name the brand, but I can see it now, black and white. There's a clue. I can say it because it's in the media. Christian Dior apparently sells a bag for $2,700 that they pay the supplier $59 for. So it costs them $59 to take delivery of this bag, and then they sell it for $2,700, which may be why Arnault is so rich and LVMH stock has been doing so well. But we know what can happen when something becomes a bit of a meme and it gets spread more widely. And what I'm saying is this: the very embryonic stages of perhaps a meme spread around the world in terms of views of some of these luxury brands, which will really hurt LVMH. But the stock was already falling. And that's because luxury is fully priced now. Luxury sort of broke away from other retail sales type products and remained very, very strong because of all the property and stock price gains. But I think it's become fully priced. And that's why LVMH is a great company. They have great products. You know, if you can afford it, buy the $2,700 bag. I don't even know if that's in the LVMH umbrella, but most of them are. So what I'm saying is, you know, sometimes great companies with great products, their share price goes down. And I think that could be a kind of situation here because pretty much everyone's long LVMH. Speaking of pretty much everyone being long, notice how there's a new AI stock that's really running high. They take turns. I noticed that Apple was strong. We're still long Apple and Tesla. That's been a great run up for Tesla. But these runs can't last forever, but they still look strong. I got stopped out of my short position in BlackRock or Nvidia yesterday, or I'm still short Nvidia. Anyway, I think Nvidia's got a head and shoulders chart formation on it. You might want to have a look at that, or sign up to my newsletter and I'll send it to you. I also saw that Australia's consumer sentiment was down. The Westpac indicator down today, that data just out. That is 4 out of the past 6 months for Australia consumer sentiment has been a contraction, negative. 8 of the past 12 months have been contraction, negative. So it's not a strong economy. And everyone's finally accepted that, but I was saying it a year ago. I wasn't too early because I was forecasting into the future. And I can't see how the Australian equity market, even if the US equity market remains firm, I can't see how the Australian market is going to continue to match that. And every day it tries to run up because the US market was strong, or firm at least. And by US stock market, I mean the indices, because most US stocks are sideways to heavy, but these big AI stocks and other stories, Tesla is an AI story now. They boost the indices so people can say, oh, the US stock market's making all-time record highs, but it's not. I also noticed in the US at the moment, there are more households participating as share traders and in active investors in the equity market than ever before, and that is of itself a big warning sign. So whilst I'm long a couple of stocks, even the US 500 at the moment, I am so looking, as I always do, and I've been too quick sometimes, but other times it's been really good. I am so looking to be a seller at any sign of weakness, okay? The Australian economy, though, as long as we have an RBA, a central bank that wants to hike rates because of inflation caused by global events largely, or price gouging locally, in other words, raising rates won't fight either of those inflation causes. It'll only hurt people more who are already having to pay higher prices. And by the way, don't get excited about lower inflation, because what that means is the already humongous, it's an economic term, very technical, humongous price gains of the past are being built on further again, even if inflation was 1%. It means those price gains that are really hurting everyday families have not gone away. It's getting worse all the time. So still a lot of pain for the consumer, hence consumer sentiment, negative again in Australia, while you have a central bank talking about raising rates. This is not a good outlook. And you don't buy stocks because the central bank might cut rates when it's thinking about raising rates. And in the US, it's not necessarily a good idea to buy stocks when the central bank may be forced to cut interest rates despite high inflation, as they see weakness in the labour market and the economy, because usually in that matrix of events, it's too late and it won't save the economy, which means it won't save the earnings of US corporations overall going forward. UK retail sales fell to the last 3 months, declines, as I said yesterday. Change of government in the UK won't solve the economic problems they have there that are really intense, really intense. So, and also Biden, yes, I've already done that. I think Trump's going to win. And I noticed that people get mad at me for saying that. I'm not saying that because I like Trump. Last election, I forecast Biden would win, and before that Trump would win, and then in Australia I forecast Morrison would win, I forecast Albanese would win. My forecasts have nothing to do with political bias. It's where I see the numbers and how I'm reading the voting public, okay? It's my read of the voting public. So I think Trump could be very good for markets in that he maintains the corporate tax rate. I'm not saying he's going to be good on every policy issue, but for the economy and stocks, he could be a positive, though a lot of people are fearing some sort of great upheaval. He could be a positive because massively lower corporate interest rates, which really did help the economy and did help employment before COVID hit last time around, just being objective. And he could even create a situation where various wars end sooner rather than later, and that would be good for consumer sentiment, particularly would be good for European sentiment, consumers, investment. So keep an eye on that. I noticed the euro's been very strong. Gold, very volatile, big two wide ranges. Be interested to see what happens there. I'm still bullish. Oil's trying to go back to $80. I think oil's going back to $80 now. It's kind of had its run up. OPEC likes to keep it in a reasonable price band. Seems to be in the price action targeting $80. Overall, in the long term, I'm still bullish oil. Australian stock market, major seller. As I said, US stock market, I'm long and I'm not happy about it. US bond market looks stronger than I thought it would. What else? That's about it, really. Have a great day. Thanks very much for watching. cliffordbennett.com.au. And also, don't forget, if you want to start a trading account or shift accounts or just expand services, personal services that may be available, go to propex.com, propex24, propex24.com. Thanks very much. Have a great day. See you. Just find the off button.